What is going on YouTube? It's Brendan from Market Makers. Guys, this is the only YouTube channel taking the macro view, the TA view, and marrying it in a harmonic symphony to the esoteric view, the secret ancient wisdom. You get it on this channel. I want to answer your questions about the Shemitah, or as I call it, the 7-year apocalypse. Guys, we had a lot of good questions, a lot of good commentary back and forth in the YouTube comments. I want to go over the cycles here back since 73 and show you something, but there's some key takeaways and some misunderstandings in the comments. So guys, just because you have this 7-year cycle, and if you were watching this video, watch the last video, the 7-year apocalypse, to get caught up in what we're talking about. But a key takeaway here is you have the Shemitah year, which is the 7th year in that 7-year cycle. Again, not a random year, not a random 7-year cycle, married to the Hebrew calendar, which we went over last video. But you have that 7th year. You don't have to have a crash. A lot of people asking, what about 2015? Or what about 94? Well, 94, we had a bond issue where 600 billion in bond debt, or bonds were wiped out in wealth, and 1.5 trillion worldwide. 2015, not a whole lot here. One of the YouTube commenters mentioned that China had a stock market crash. So you don't need to look for a crash every single Shemitah year. What you need to understand is for 50 years, going back to 1972, 1973, that Shemitah year, for 50 years, every single major crash in the market has occurred on that Shemitah year. That's what you need to understand. You have the Shemitah year and you have a major crash going back 50 years. Doesn't mean you have to have a crash, but guys, bring it to current date. This is what happened now. The Shemitah started last September 2021. So you had November, Bitcoin, Nasdaq, Russell, all made their tops within 2 months of the Shemitah starting, okay? The S&P made its top January 4th. They all topped out, all have been crashing down. The Nasdaq going down as low as minus 33%. We're going to get into the current TA, but understand this cycle. So for the people saying, oh, that's hocus pocus or that's whatever, that can easily be debunked, debunk it. Every single Shemitah year, we're going to go over it here, since 73, you can see the drops for yourself. Does it capture every single drop in the stock market? No, it captured all the major drops in the stock market and the fact that you had that 1 year out of 7, and that's when the drop occurred. That's what you need to understand. That is the key takeaway. It is a market pattern. And if that triggers you because it comes from esoteric knowledge, it comes from biblical knowledge, it was discovered by a biblical researcher, then I'm sorry, you don't deserve to make any money and you should watch another channel. Because what we do on this channel is we want to make money, we want to find financial freedom. And when you have a freaking obvious market pattern, once you understand the pattern, we're going to go over how it's played out here. You got to be a complete idiot, which some people are. You have to be a complete idiot to not be aware of it and not take advantage of it. That's the difference between what I do for you guys here and what you get on other channels. Other people have the same view as me. Oh, we're crashing, it's a bubble. Do they give you a pattern of when you will crash, the day you will crash? Do they explain when you will bottom? They don't, because in this space, guys, just like in the investment world, there's people that just do macro views. They don't understand technical analysis. There's people that don't understand esoteric patterns. There's people that don't understand these different variables. This is the one channel, your one-stop shop, where you're getting everything, okay? And I make nothing from YouTube. So you're getting everything here. I put it out there for education because I want to help people. And if you want to support this channel, guys, definitely like and subscribe. And check out our room if you want to learn how to trade, be around 11,000 plus other people seeking financial freedom. That's the join button underneath this video. And then in the video description is our Telegram for trade signals. Guys, if you want to support me directly, support this channel directly, definitely, if you're going to trade, check out our sponsored platforms. This is where I trade. SimpleFX in the video description for the equities, guys. If you're not taking equities trades, you got to get on SimpleFX. The equities market is hyper volatile because we are trading in a bubble. We're going to get into that as well. And then, of course, BITGET for all of our cryptos, guys. And you can get up to $5,000 instant bonus on SimpleFX. Definitely check them out. I don't want your money. You don't need to send me thank yous. I really do appreciate the people that have sent thank yous. You don't need to do that, guys. I don't want your money. I want your broker's money. Right? I don't know if any of you saw that movie, Two for the Money, with Matthew McConaughey and Al Pacino. Great movie. There's a line in there, I don't want your money, I want your bookie's money. Well, that's how I feel. We have two great sponsors on platforms that we use, guys. If you are going to trade, check out those platforms. You will really enjoy it. The tutorial, the video guide for how to use SimpleFX, if you are new to it, is in the video description as well. Let's jump into this, guys. Oh, one other thing. So about the Shemitah, the 7-year apocalypse. One of our members, a good friend of mine, Anna, she wrote a quick script. And we looked at, because we have long-term holders, obviously, in the crypto space. We have people that are just in the stock market. And keep in mind, the majority of active money managers can't beat the S&P, right? Here's some more proof in the pudding for you about this cycle. The majority of active money managers cannot beat the S&P over the long term. So Anna ran a script, used like $100 as a baseline. She just picked the year 1965. You put in $100. The only thing she did for the Shemitah, the only thing she did for that run from 1965 to current is she took the money out August, right before the Shemitah begins on a Shemitah year. She took the money out in August and then put it back in the following October. Not trying to pick a top, not trying to pick a bottom. And then she put $100 on a script and let it run. She just bought in 1965 and held it to present day. You made 3.5 times more money, knowing nothing about trading, knowing nothing about picking tops and bottoms, by doing one simple thing in a Shemitah cycle, the 7-year apocalypse. Take your money out in August before the Shemitah starts, put it back in October. You made 3.5 times the amount of money after that Shemitah year ended. Guys, I mean, it's as simple as that. It's as simple as that. I don't know what people's problems are. We live in this world where everybody gets triggered by everything because something has its basis in a religious book. It's just absolutely amazing to me. But guys, let's go ahead and go over this. Looking here, going back to 73, and actually I want to start here because I think this is how this pattern is going to play out, how this market cycle is going to play out right now. We are trading in the 7-year apocalypse. We are trading in a 3 sigma bubble, which is 3 standard deviations away from normal trend. We're going to go over those targets. We're going to go over crypto. We're going to go over a lot in this video, guys. So stay tuned and watch this, okay? So let's talk about this. So 1973, couple of things that you notice here with the Shemitah cycle. So what happens is you have the Shemitah year began in actually September 72. What happens is the acceleration of the decline happens in the full Shemitah year. Right? And that's what we're coming into now. We're in the full Shemitah year, and the Shemitah is ending, the culmination point, Elul 29. And what happens is you get an accelerant. Here in 1973, look at this, January 11th. Okay, I think we topped out. January 11th is when we topped. We topped this time, this year, in this Shemitah year, January 4th, 7, right? There's that number 7, 7 days apart. Also of interesting note, this cycle is 7 Shemitah cycles ago. 7 times 7, 49. So I think we're going to end up playing out this way for a couple of reasons. We topped out in January in the 1973 cycle, as well as we bottomed in September of 74, the following year. So that would mean we'd be looking at a bottom potentially next September, okay? 2024 September. Now, a key difference here versus then, we have a massive amount of debt. We could easily spiral into a financial crisis, lots of variables, but this is how this pattern could play out in current day. But here you have a 49% declination in price. Here's 1980. This is the Paul Volcker raising interest rates, crashed the market. Notice the market recovered and then went back down again. Like I said, you don't capture every single downward move in the market, but every single Shemitah year where there's a crash, it's in that Shemitah year, okay? So let's go ahead and continue. Let's go to 1987. Black Monday, almost a 36% price declination. Again, this is the second part of the Shemitah year, accelerating, coming out into Elul 29, accelerating, coming into Tishri. What happens? 36% price declination. I mean, this pattern is absolutely amazing, guys. And as somebody that trades based off of patterns, it's an amazing pattern for capturing these massive market movements. Now let's look at this. So here we go, guys. Look at this. With the explosion of the internet, the .com, with the explosion of everything coming in, United States growing, population growing, more inflows, the economy expanding. Look at this big move up for the .com bust, okay? .com bust, speculation, internet trading just coming online, lots of new things happening. And of course, we hit a top here in March of 2000. Remember, September and March, the 245 angles in the Gann calendar. We hit a top, and then what happens, guys? The second part of that year, let me look at the symmetry here, 50 spot 50. The second part of that Shemitah year, you have the biggest move down, okay? And then you bottom out here September, October of the following year after the crash. Again, this is why I think 2024 may be the next potential bottom, but we could have things much worse this time than we did here, because here the Fed was able to come in and help. And look what happened. A lot of people were asking me in the comments, Brendan, what does that mean? After we bottom, do we run up? We can run up. That's the whole point. If you get in at a bottom, guys, you will have that 6-year run. Of course, you will have price waves, you have ups and downs, but overall direction should be up. That's the point of hitting a bottom. You're at the bottom, you go up. Okay, you're at a top, you go down. So this is a key thing to remember. Now we run back up, and of course, 7 years later, we're back in the Shemitah. October, a month after the Shemitah starts, in October 07. Remember, September to September is a Shemitah year. Look what happens, 57.69% price declination, great financial crisis. Now, let me zoom out for this. Guys, you got to see this. So, normal stock market returns. I mean, look at this. When people talk about a bubble, you can see the run up for your massive bubble. You see your parabolic rise. Same here. Fed stimulus, come back in, more speculation, internet economy is booming, and then you come back up, and then look what happens, minus 57.69%. Now, what happened over here? This is when the whole market dynamic changed in stocks. It changed in the investing world, guys. This is quantitative easing. This is TARP. This is all that stuff that happened after the great financial crisis, that the Fed started printing money, bottom line. They printed money. And if you take, depending which calculation you look at, up to 41% of all the money has been printed that's currently in circulation since that 2008 great financial crisis. 21% or more since the pandemic alone. This is why you have sky high inflation. And look what happens with the Fed cutting interest rates to zero, with the Fed printing billions upon billions, which turns into trillions upon trillions. Look at the parabolic rise you get in this index. And right here you have the pandemic drop, 35%. You see these down numbers go over and over again, right? 33%, 50%. You see it over and over again. So this is where you have your pandemic crash. And then what happens, guys? More trillions upon trillions printed. And this gives you this parabolic run back up for your bubble, okay? For your super bubble. So what we can do on this channel using natural law trading, using Fibonacci, using market patterns, we can look at probable targets for our declination and where we will end. We can look at market history to determine the likelihood of hitting said targets as well. So 35% drop from the black swan event of COVID. And you have that drop. Massive bailout, massive run up, inflation soars. And what happens, guys? The S&P got down to minus 24.52%. bounce back up, coming back down. So that's where we are now. If only we could find a way, if only we knew market history, what the S&P normally does in bubbles. Well, let's look. In a bubble, you have a 57% decline, a 50% decline. Going back to 73, you have a 50% decline. The S&P seems to like the natural halving and doubling in the marketplace, as Charles Dow said. So if you look at this, guys, let's take a look at the S&P. Let's go ahead and measure this out, because you guys have seen me do this. And I know you guys know this that watch this channel, but your friends might not know this that are in these markets. Your family may not know this that are in these markets. Consider sharing these videos with people that you want to be aware. This is TA, this is market history, and this is very powerful information that nobody talks about in this space. So if we take the trend-based fib, guys, using our market price pulse pattern, and again, we have what's going to be the first, second, and third wave, and then an ABC correction, because the market moves in threes. You go from your A wave down to your B wave, up to your C wave on the S&P. Now look at where your 1618. Why is this significant? Because this is the golden ratio. Again, the symmetry in the universe, from the Great Pyramids to the proportions in the human body, phi is found everywhere, the 1618. Now you could say, well, yeah, but why does that mean we're going there? Well, it's not that it means we're going there. You start putting things together, guys. And when you put things together, you realize things like the market likes to be cut in half in equity bubbles. .com, 08 was not an equity bubble, but the market still got cut in half, by more than half actually, by 57%. 1973 went down by 50%. So we know that 50% is a realistic number. Where does the golden ratio land you? After it completes the first half of my Gann price pulse pattern, where does that golden ratio land you? Everything to some people is coincidence. None of this is coincidence. Let's just take a declination from the all-time high. Where does phi land you? Look at that, 50%, 49.99%. A market pattern that has been repeated every single equities bubble in the stock market going back 50 years. This is a market pattern that repeats in a Shemitah year, again capturing all of the big crashes all the way back to 1973. Guys, you can put two and two together or you cannot. And I'm sorry if you cannot, but this is very powerful information for people wanting to understand the markets and how the markets react. So you can see the 1618, again, is 2409, which I have been talking about for months and months and months. See, lots of the macro guys, they can give you the macro view. Oh, look at the bond market. Oh, look at the dollar rising. Look at this, look at that. Hey, well, when's it going to crash? What level is it going to crash to? I don't know. It's going to be huge, though. 80%, 90%, 70%. Well, I can tell you with a realistic target, this is why I said this is a minimum. At a minimum, you're going to 2409. At a minimum. If there's a financial crisis, something happens, wars, whatever happens in the world, you can go down further. But at a minimum, you will see this target hit, I believe, during this crash, this crashing cycle of bouncing up, bear market rallies, and everybody will get bullish every single time we do one of these. Finally, we're rallying back up. Guys, I've lived through two of these. I see the people on TV, they have zero idea what's happening in the marketplace. They have zero idea about the 7-year apocalypse. They have zero idea about a 3 sigma bubble. You can watch CNBC all day. Do you ever hear anybody, unless they have Jeremy Grantham on or Ray Dalio, does anybody talk about a bubble? No, they don't. You don't study this when you're taking your financial tests. You don't study these market cycles, market modeling. This is something you have to decide to do yourself. And when you do it and you talk about it, people think you're crazy. I've been talking about this since last November. And if you go look at my comments about how I'm too bearish, I'm an idiot, I should go die in a car accident, look at the things people were saying and then look at Bitcoin now. It's all about understanding where you are in the trading cycle, guys. So this is the S&P. It's going to 2409, okay? And let's go ahead and look at the S&P on the daily. We lost to 50. We fell back down. I'm going to see if we start to regain some momentum, possibly retest to 50. And if so, we'll be talking about shorting again. Let's go ahead and bounce over to the Nasdaq. So Nasdaq, let's go to the weekly first. Where can we do this? We can do the exact same thing on our price pulse pattern, guys. The exact same thing. Where is the Nasdaq going? We know the Nasdaq went down 82% in the dot-com crash. So we know it went down 82%. We know we're trading in the 7-year apocalypse, and we know we are trading in a 3 sigma bubble where the Fed can't come and rescue us or risk running hyperinflation. Exact same thing, trend-based fib, weekly time frame, 1618 at 4446. So that is what? 4,446. Nobody will believe that number. You know why nobody will believe that number? Let's just look at the price declination. You're crazy. It's never going there. Oh, but it could easily go there. There's actually only about 74%, 73% price declination. You're going below your pandemic lows. But remember, in the dot-com crash, Amazon went down 92%. Is Amazon the same company now as it was then? Of course not. This doesn't matter. You are trading in a bubble. Something I want you guys to understand, you hear people on TV all day long talk about price evaluations, price to earnings. You hear these things over and over again. You hear them disparage crypto, say it's all speculation, it's gambling, it's garbage. Let me give you a hint here. Charles Dow, Richard Wyckoff, W.D. Gann, you know what they all said about the stock market? It is speculation. It is. It's the exact same thing as speculation. How can I show that to you? Let me just show you. For those of you not familiar, price to earnings. Let's just look at a couple of things. So price to earnings. So you had Peloton. Peloton at one point reached 119 times price to earnings. So let's look at a couple more, then I'll give you an example. Nvidia got to 42, or as of now, it's 42. And I'm bringing up Nvidia because they're talking about it on TV today. Oh, I still think Nvidia is great. It's a little expensive. 42 PE, a little expensive. I'll give you an example in just a second, guys. And then let's look at Tesla. Tesla is at 100, okay? It was well above that for a while last year. I don't have the exact number in front of me, but Tesla is at 100. So let me just give you an example using the Tesla PE. I like Tesla. I have a Cybertruck on order, which has been on order for years, and who knows if they'll ever make them. But 100 times PE. Remember that lemonade stand we talked about before? So let's just say you're an entrepreneur. You have a neighbor, has a daughter, has a little lemonade stand. She makes $1,000 a year selling at her lemonade stand, $1,000. So if you want to offer her, according to the Tesla PE ratio, would you offer her $100,000 to buy her little business that makes $1,000 a year? That's the 100 PE. Is that what you want to pay for that? $100,000 for a lemonade stand? But they say, but Brendan, it's growth. You could grow that lemonade stand into 5X, 10X, 20X. Yeah, you could, but that's why it's speculation. That's why the master traders of old, including Jesse Livermore, the first billionaire trader, all recognized it as speculation. Nothing in the stock market is worth what it trades at. Nothing. I think the PE right now in the stock market is 17 or 18. So you'd be paying 17 to 18 times earnings to own a piece of that asset. It's not worth that, but people do it happily, and they pay over 100 for things that they love. They pay over 119 for things that they love or things they can make money off of. And currently with Nvidia at 40, they'll pay you $40 on the dollar. $42 on the dollar to get a piece of that company. That is 100% speculation. That is my rant, guys. Just understand these people that act all high and mighty because they trade in equities exclusively and they just disparage crypto. I can't say the words I want to say. They're speculating just like everybody else is. We're all here to make money. So look at the Russell real quick and let's jump over to Bitcoin and we'll talk about DXY as well. It's gonna be a little bit longer video today. So we're gonna get back to these patterns, but look at the Russell, guys. So again, I can tell you with a complete 100% certainty as long as this candlestick pattern holds true, that you will have a bottom in the Russell on October 31st. Doesn't mean it is the bottom. In other words, it can go back up and then go back down, but you will have a bottom. So until then, we're descending, okay? We're bouncing up and down, looking for October 31st, just like on Bitcoin. And this is a pattern, Dante's descent, based on 1129. 11 bar drops, 20 bars between tops, 9 bar run-ups. Repeat it 2/3 of the way through, just like on Bitcoin, giving you the potential day that you make a local bottom. As long as this pattern holds true, 2/3 of it has completed already. The Russell, where's the Russell at? The Russell fell back down, fell below the 50, struggling just like everything else. We got a nice demand wick here. We'll see what's going to happen going into the long weekend. We are oversold here. Not super oversold, but we were in an oversold territory on the money flow on these indices as well, okay? So we might be trying to make some type of local bottom here, maybe a little wave up, maybe retest the 50 and then go back down again. So I'll keep you guys updated about that. And you can see here, I wanted to show you this one more time. This is the Russell on the 8-hour chart. Remember, we had this beautiful Wyckoff Gann layout, the Wyckoff lines here in white, and we completed this Wyckoff structure textbook, which is why I like to bring it up, because people always ask for examples. Buying climax candle, line goes across. Reaction candle, line goes across. Volatility in the range. And what do we do, guys? Roll up, retest your support, aka the cup, and pivot out. The Livermore pivot out, and we short it up here. It's the trade we talked about, guys, and you can capture all of this price declination using SimpleFX. Let's go ahead and bounce over to Bitcoin. Oh, actually, let's go to DXY, then we'll go to Bitcoin. All right, guys, DXY. I've been saying this since I'm blue in the face, and I got some hate for it from some people in the comments, including that one guy that said the only thing rising faster than the DXY is my ego. The DXY is doing exactly what I said it's going to be doing, and this is again why you're not getting to 250K Bitcoin. This is why you see crypto people saying things like 60K Bitcoin. Oh my God, this pattern's amazing. Oh wait, scariest pattern I ever saw. 4K Bitcoin, 3K Bitcoin. Guys, in this space, people just say things, they watch other people's videos, but they don't understand the method to the madness. This is a parabolic rise in the DXY. This is US dollar measured against a basket of currencies. I told you we were not breaking down here. I told you we would break up and continue to go up, and you are approaching that 112 region. You are currently at the highest the DXY has ever been. Since when, guys? The .com bust. Right now, the S&P, I think, just crossed 100 days below the 200-day moving average. The longest time the S&P has been below the 200. Since when, guys? Since the great financial crisis. The other two, 3 sigma bubbles. Are the pieces snapping together for you? The Lego pieces snapping together? You're trading in the 7-year apocalypse. You're trading in a 3 sigma bubble. You have the biggest hedge fund in the world, Ray Dalio's Bridgewater, telling you to get out of the market. Stocks will drop another 20 to 25%. You have Jeremy Grantham going on TV as early as last year telling everybody you're in a bubble. He started shorting the market last year because he said the timing is really difficult. Again, the macro problem, the macro viewpoint. Guys, the wealthiest people that have made a pile of money trading bubbles have the same exact confluence with me as far as where this market's going. The piece that they're missing is the TA and the targets and the timing. And that's what you're getting on this channel. This is all coming down. Okay, this is all coming down. You can have people watch the bond market for signals and not know when it's supposed to come down. That's why we track it with patterns. And we have those patterns on Bitcoin and the Russell. We have targets on the fibs for the Nasdaq and the S&P. We know where this is going, and it's all about capitalizing on the way down. So we know this is coming up. I expect this to get up towards 120. Look at where Phi is here, 117. Again, repeating the exact same cycle as the .com equities bust. Bounce over to Bitcoin, of course, the Dante's descent. Watch that video from last week, guys, the exact day Bitcoin bottoms. You will see this pattern, so I don't have to rehash it. Same as on the Russell, but even more true than the Russell. No single candlestick has broken this or a wick even by $1, okay? This is a perfectly tracking pattern. 11 bar descent, 20 bars between tops, 9 bar run-ups, Each and every leg down, this previous high, this swing high, was your top that was never broken. And of course, I mentioned this before. This is that big trade I gave you guys on YouTube and in our room, 48,240. I think on BITGET it was 48,266. And this, of course, was a 46% drop to that level and plus 60% drop down to this level, okay? What I'm doing is watching this because we have Bitcoin here going towards a bottom on October 31st, tracking 100% true. And again, key takeaway here, guys, 25,214 should not be broken. If this pattern is to hold true, this should not be broken. You can go up, you can go down, you go up, but ultimately you should be making a bottom October 31st, Halloween, and then have a 9-bar run up. How did we get the 1618, guys? That's the average of these two drops. The average of these two drops magically lands you almost to the dollar at the 1618 trend-based fib, 10,591. Fascinating, right? It's all a coincidence, as some of the commenters say. It's all a coincidence. Let's go ahead and look at Bitcoin, guys. Bitcoin is just trading in a super tight range. We were trading in this parallel channel I shared with you last time. Obviously, just sitting here at the base. More importantly, sitting at 19,554. We got to zoom into the smaller time frames. Again, what I'm always looking at on the daily, guys, where I trade the big swing trades. This is why I'm always tracking your 200, 233, 150. This is where the biggest Bitcoin trades are going to happen on a daily time frame in a primary downtrend market in a bubble. Okay, this is where you want to see, just like that 48,266 trade, come up here at some point. It's all about patience, and we have scalpers posting scalps and smaller time frames to catch these smaller movements on smaller time frames. But this is the big kahuna trade that I'm looking for. This may happen further down. This may happen after Bitcoin crashes more and these keep descending, or we may get some type of market structure change. Maybe the CPI that comes out, I think, on the 13th, maybe that comes in really low. We get big rallies in the markets, but this is something to watch, okay? Let's go ahead and jump forward. Looking at the 4-hour, you have some different shapes here being made on the 4-hour. You have a nice double top that was made here. You have to watch that. You even got a really clean neckline here. Obviously, Bitcoin's reversing a little bit here, but it's trading this really choppy range, so you want to watch that. And of course, the 4-hour time frame is capable, once you impact the 233, 150, 200, been over it many times, guys, so I'm not going to bore you with it. Once you impact this, capable of giving you massive trades in a primary downtrend market. The 4-hour can have some power, okay? And I think that's where we're at, guys. A little bit of a long video. Hope you enjoyed this one. It's kind of juiced up for this video, but I hope you guys enjoyed it. I'll answer all your comments. I got through, I think I answered everybody's comment, if not everybody's on that last video. Damn close to 99.9%. So really enjoy talking with you guys. Thank you for supporting the channel. Please do like and subscribe, and good night and good luck, everybody.